Hey everyone, welcome back to the channel, Trading Futures Live, where we trade futures live. Thank you for joining us. Today we have a pretty exciting day ahead with quite a bit of news later on in the afternoon, federal funds rate, so we're expecting a busy day, especially in the afternoon. That being said, trading is inherently risky and can result in a loss of capital, so please do not take our trades. Trade at your own risk. We're here for educational purposes. And with that, I turn you over to Franco.
Hey, good morning guys, Franco here. Welcome back to the channel. I want to start off the day with some of the pre-market routine that we use here in the office. Right, and the way it works is, okay, we sit down in the morning to assess what the market is doing or what it did overnight. We, try to see what news happened overnight, what Europe was doing. And the way we start is we watch all the news events that happen, right, during the overnight session. So we have some reports that came out from Europe, right, and then we start to see the reports that come for the US dollar, which is the most important currency that we use, right? We can see how the MBA 30-year mortgage result, all the indexes regarding mortgages, those come out once a week and at 7 a.m. so it's pretty early that they come out, right? I want to put this screen for you to see how I do assess what is going on in the markets, right? So, and let me take this off of here so I can, there you go. All right, so we can say that a lot of news are coming today, plus FOMC meeting and news conference in the afternoon. So I will go over like a couple news reports that are coming out before the open market, the Federal Open Market Committee released their statement, right? Now we can see how the dollar is weak today, but it's been in the range for the last 4 days. So we could have a breakout or a breakdown of the dollar, right, with the report today. The yen is off of the lows against the US dollar, right? And for those that does not know, the yen was dropping sharply against the dollar to the point that the Japanese, the Bank of Japan had to release certain reports about what to do with their currency, right? That's the third largest economy in the world, so it's a pretty important situation over there. We can see that the Australian dollar is one of the strongest currency today against the dollar. The euro is flat. Why do we check off all these currencies? And the important thing is that we can title them as a safe haven or a risky asset. For instance, traditionally, the yen and the dollar are considered safe havens. So when the market has a risk-off sentiment, all the money tends to fly to those assets like bonds, the yen, the dollar, gold, right? And the money goes away from risky assets like equity market, stocks, crude oil, more speculative asset, like the Aussie dollar. The Aussie dollar is a more speculative asset, right, compared to the US dollar. So continuing here, I have a CL is up sharply, so that gives me a little bit of a risk on sentiment, because crude oil is a very risky asset. Now metals, and when I say metals, mostly I watch gold and silver and copper. They have been flat, and it's not coherent with the dollar move, because the dollar is dropping 0.2%. So those 0.2% could have made gold to go up, but it hasn't. Now gold has another consideration. There's supply and demand factors that, you know, influences the price. But for now, I say metals are flat and not coherent with the US move. And when I say not coherent with US dollar move, that means to me that one of the assets are going to move in the other direction. Like either gold is going to go up or the dollar is going to go up. Then I see the VIX is flat, right? But sharply dropped yesterday, and the equity markets did not go up. So that tells me that the asset being traded is the VIX. And I'll show you guys later the chart for the VIX and how it went to 36 and it started to drop very sharply. Remember, traders, very speculative traders, trade the VIX. So you can go ahead and trade the VIX directly, right? Sell or buy the VIX. So every time we have a spike in the VIX, a lot of traders are going in. Now that's a very risky move. I do not recommend that, but yes, the VIX is very important here. Then I have a watch list, and then I see the 10-2 spread, and I'll explain that later in this channel. What is the 10-2, the lumber to gold, and the 5-year tips. I will explain that, you know, later in this channel. So now we're off. The market is already open, and I'm gonna go back to the charts to see if we can find any opportunities here. For now, I do see all the equity markets equally going down, like ES, RQY, and NQ are pretty weak. This blue line is the overnight low. Like I've said in this channel, the overnight high and overnight low are very sensitive points, right? Every day tend to, you know, be some support or resistance point. Now, I do not expect a big move before the 2 p.m. meeting, because traders just tend to wait what is going to happen. So what we'll have here is some day traders trying to, you know, trade this market, but I don't think any institution is going to be making this market to trend. You can see how price did break the overnight low and try to retrace, but it's still holding. We have our mascot here. Just while I hunt any trade, can you go over any of the news that we had in the morning, like trade deficit, ADP non-farm employment change. If I have time during this broadcast, I will explain more about them. But for now, I want George to go over the results to see.
So today we have ADP non-farm employment change here. It's a red folder. You can always go to forexfactory.com for the news calendar. And you always want to look at the folder colors, red being the most important, orange being obviously of medium impact, and then the yellow being low impact news events. And today we have quite a few red folders, as you can see here, but the first one this morning was at 8:15. It was ADP non-farm employment change. It's a pretty important indicator leading into Friday, when we have the official non-farm employment numbers from the federal government on Friday at 8:30 a.m. And so the ADP is a precursor to it, the ADP non-farm employment. It was forecasted to be 382,000. It came in below at 247,000, which is quite a big decline from the month before. And so employment is down. You can always click here in the forexfactory.com website as well. You can click on the folder right there, and it will give you a description of what the news event is about. And so estimated changes in the number of employed people during the previous month, excluding farming industry and government. And so actual greater than forecast is good for the current currency. Less than forecast is bad news for the currency. And so we came in less than forecast, and so that is not exactly good for the currency. Tomorrow we have red folders from Great Britain. They're doing their monetary policy as well. They're expected to increase, looks like 25 basis points from the 0.75% to the 1% increase, where we are expected today to have a 50 basis points increase from 0.5 to 1%. But that has already been factored into the market. The market is expecting a 50 basis points increase. So the real news today will also be at 2:30 when Powell, the Fed chair, has his press conference. That press conference, everyone's listening to see if the Fed is planning to be more hawkish or dovish moving forward, and that's really what's going to drive the market. Is the 2:30 is the statement coming out, and then the 2:30 press conference. So with that being said, I'll turn it back over to Franco.
All right. Yeah, the real news is not the 50 basis point. That's already baked in the market. Now we need to see what Powell comes with. If he's gonna rock pull those, which I don't think is very likely, but how hawkish or dovish he comes. Now, there's one thing that I like to point out. Like, we already had a negative GDP, right? Negative GDP reading on the first quarter. So if a second quarter GDP comes negative, that's technically a recession, right? So I don't know how aggressive does Powell wants to be. That's the expectation of the market today. Right now I'm seeing the AD, QD, and the tick chart leaning to the short side, but the market is really going nowhere. It broke the overnight low and is holding right there. Like I've said, that's a very sensitive point. And I can see how the volume is a little lower today than average, and it does make a lot of sense because a lot of traders are not even watching the charts right now. They're waiting for the statement and the news conference in the afternoon. We will need to train Jack better not to bark. Feel free to ask questions if you guys want to ask anything. What I'm looking at right now is the break of this area, right? There's no demand, there's no supply just formed just yet. I'm watching this closely. So I could have this area right here. Can go ahead and put you the 1 minute so you can appreciate the faster pace here. Now, there's one thing that I do like to see, and is different time frames. I do have, do you guys just see the 7 minute and the 1 minute here? But I have a 30 minute, I have a 3 minute, I have a 5 minute, I have pretty much every time frame that I'm interested in. Why? Because I want to see confluence on the patterns. I want to see if I'm trading short, I want to see how all the time frames are aligning to the short side, right? I don't want to go against any trend. Like if I do have a super bullish 10 minutes, I don't want to trade short, right? I think the hardest part of trading is having realistic expectations. Like, it really hasn't moved since 9:30, right? With just 11 minutes into the market, but it moved like 40 points, which is it's not a small move, but based on different trading plans, you can be trading these candles, right? But how realistic is for you to win when the price is not moving, right? We as a trader, we need a move. We don't need a trend, but we need to move, right? Depending on what type of trader you are, what makes you feel better or more comfortable. For me, is alright, it moved in one direction, so I'm gonna, once it comes back, I'm gonna trade it, right? I don't wanna rush into trades and try to guess move. And this is important because a lot of traders just try to guess moves based on patterns, right? Based on pure patterns. And I don't. I just want to see how price moved away from the zone, signaling strength. Meaning, if I'm going to go long, I want to see that the price came out sharply from that area, not slowly. I want to see very aggressive buying, right? And then when it comes back, I'm going to trade it. That's the way I trade. Now, right now, this could be a distribution zone being formed, right? So how will I know if this is a distribution zone? All right, when the price, if the price comes back down like this, right? Oh, when it comes back here, then I'll trade it, right? Why? Because it's hard for institutions to fill all the orders at once. It takes time. There's not availability for institutions to fill their orders at once. So what usually happens is this. They sell, right? Price goes down sharply because buyers are running out of steam right here. And then some buyers come into the market to take the price back up to the same area. And then the same institution will sell again and will try to fill the rest of the order, right? Now, it's very important for me to say this. Trading is very risky. And you should not trade with money that you can't afford to lose. And why do I say that? Because every single trade is a roll in the dice. We're guessing here, right? We're making an educated guess based on probabilities. What probabilities? For me, it's my performance, all right? I see something in the chart, right? I've tested that, and I have tested enough that makes me have this probabilistic approach and the confidence that in the long run, I will make money, right? Does that mean I will win every single trade? No, right? And that's one of the most important, mindset that traders have to have. Traders need to have this type of mindset because right now is not very typical that this happens, but you only needed it like 2 years ago. You just needed a tweet for the trade to work or not to work, right? Yeah, you'll be in this amazing trade, and then someone tweeted, and the market just moved in the opposite direction, or in the direction of a trade. Alright guys, so what is going on here is very expected. Like I said at the beginning of the live, I'm not expecting a large move before 2 p.m. Although we will have some news, like we have, we just had a services PMI, right? And then we have non-manufacturing PMI at 10. So those reports are gonna cause some volatility. But the main show is today at 2 p.m. I would like to go over what these reports are, but for right now, I want to focus on find some trades because I won't be able to trade in the afternoon. So I have some family things that I need to do. But after my trade, I will go over what the ADP and the ISM reports are, the PMI reports, for you guys to have that information. Now, remember, we don't care about the results right now, right? If a report comes out, we just care about the time that the report is going to come out. Why? Because we know that it's going to cause some volatility. We don't go and rush into the Forex Factory or investing.com. I like investing.com, by the way. We don't go to Forex Factory real quick to see what the number is to trade long or short. No, we don't do that. We just care about what time the report comes out, because that report coming out is going to cause some, it's going to trigger some algo trading, right? We human, we're not fast enough to trade those results, right? By the time Forex Factory refreshes and we see the number, the move already happened in the chart. So, but what we care is, all right, the report is coming at 10. What do you guys think is going to happen at 10 a.m.? The chart is going to move. Price is going to move in either direction. We don't know. But we need to be aware that those reports are coming. Plus, like I said, I'm starting this challenge with a funded account, $150,000. Certain funded accounts have restrictions with the news event. So, can you check that on mine?
What type of account is it?
Is a one up, yeah. Okay, can you check that? Because I want to be sure. I know FOMC is certainly restricted.
Yeah.
1 minute before and 1 minute after. But I want to be sure if the PMI it's allowed. Just in case I'm in a trade, I don't want to fail the test. No, it's not a test. It's a funded account. Now we can see, and I'm gonna go over these. The screen is still mine, right?
Yeah.
Okay. I want to show you guys how I want to show you guys how the NQ, this is NQ, right? This is a 30-minute. This is the 30-minute chart. So we have the upper left, we have the ES, then below we have the RTY, which is the small caps. Then we have NQ, which is my main trading instrument. And then we have the Dow. But we need how we see here how the Dow is the strongest today, right? Then we have the ES, and then in this order, the RTY and the NQ are the weakest. So if we want to trade short, right? Because I was seeing some short signals with the ADQD and the tick chart. What do you guys think we should be trading, right? We don't want to short the Dow when the Dow is the strongest market, right? I do trade mainly the RTY and the NQ, but between these two, which one I will be trading? Now, I can see here, this is a 30-minute, right? But what if I go to the 5 minutes? All right, which one is weaker? And I see here how the NQ is showing more weakness than the same RTY, right? So if I want to trade something, I think is to the short side, I would prefer to trade the NQ, right? That's my that's how I am thinking right now. Okay, which one is better for me to trade? Which one can run, more? Which one can make me more money? right? So it's 9:52 and 30 seconds, right? You guys can appreciate here how the market is doing nothing. It's been in this range. Oh, which one is the rectangle is Control F12. Yeah, it hasn't moved. It has not moved, right? Now, I'm gonna speculate here. We have this tested demand from yesterday. So what could happen is this: comes here, comes back here, and then stays flat during the day before 2, right? Like I said in the morning, volume today is a little under average, and it makes a lot of sense. It's going to be above average, but after 2 p.m. Right? Today is going to be a higher volume day, but because of at 2 p.m. a lot of orders are going to come in, a lot of algo trading are going to be triggered, and by the way, trading the FOMC is not an easy thing. Like, let's say the news comes out at, I don't know, 2 p.m. The 2 p.m. 5-minute candle, it usually goes like this, then like this, and then the chart is not large enough for me to. All right, this is the type of movement that you will see after the FOMC minute comes. The statement, right? It goes up, it goes down, it's very messy, and then it ends up at the same point that it started, right? After that, it's gonna pick a direction, either go or down, either go down or high, right? All right, there you go. I have a zone here.
Got 5 minutes left in this hourly candle.
Yeah. Did you get the information?
Yes, so for one-up trader, actually you have a flexible schedule. It's unrestricted trading schedule for funded traders.
Meaning?
Meaning there is no, there are no news events that restrict your trading.
Are you serious?
I mean, it's, here, let me, if you see here, flexible schedule, unrestricted trading schedule for funded traders.
No, that's the schedule, but check up the news reports.
There's nothing in here about news reports.
Are you serious? No, they might have changed it because
some of them don't have news restrictions. For example, Lilu doesn't have any news restrictions.
I know that.
Earn to Trade does, but
oh, I thought I had.
All right, I had that zone, this zone, and if price ends up coming here or somewhere around here, let's say, I don't want to be so aggressive, but somewhere around here, and then I have a retest and I have all the conditions met, I think I will trade this short. So what I want to see is when price comes back up, I want to see some sort of extreme, or at least above the zero line on the tick chart. And I'm gonna be stopping this trade here, right? How much is the risk? $56.64. Oh, yeah, I need to select the trade. So
order submitted.
Oh, is $170. So what I'm going to do,
order canceled.
I'm gonna go here and here, and I'm gonna go to, I don't want to be overly aggressive, right?
It's a new tick low on the day.
Yeah.
Order
Not a very extreme tick low, but it is the tick low of the day.
Yeah.
And the ADD continues to
fall.
All right.
Let's
see if it breaks this low.
I might have this opportunity here on the next 15 seconds when the new candle opens.
We did have a message earlier from somebody in the chat. BT Trader asked, so what was your bias for the morning? Sorry, I missed the beginning. I didn't interrupt you earlier because you were basically going through that. So, BT Trader, sorry I didn't call you out earlier, but Franco was in the middle of explaining his plan when you sent that text, and I don't want to interrupt his thought process.
I was long bias. I was long bias at the beginning, right? But after the market opened, I saw how the ADQD and the tick chart were very negative, and I switched my bias to the short side. Now I have a demand right there. I have a demand right there, so this might continue to go down till demand and then bounce back up for a little bit, and then So the patience is one of the traits that a good or a professional trader must have. So right now we're being very patient, right? I want to see the price to come back to my zone, right? We already have the report out. So right now is it's like 40 points off of my entry, right? What I want to see is the ADQD still pointing down, right? And the tick chart is not flipping to the upside. So that is good for my trade. If we get filled in this trade, I want to see how these conditions are still the same. Now, this zone that I'm looking at here is location-wide is pretty good. It already moved down, right? We might need to be more patient for this zone to, you know, come into play. But look, I have these two pivot aligned with the oh well, no, these two pivots were below the overnight, right? This orange line, the red line, and if we see the big picture here, right, we have a lot of confluence with all this pivot and, you know, like supports that were created. So remember, support can turn into resistance, right, after price goes back. And why is that? Because a bunch of traders are trapped. So that is something that we take into consideration. Like the majority of retailers or retail traders that lose money, right? They're trapped when their positions. Let's say you went long and then you went, you know, past your stop, but you're still holding. When it goes to break even or you're losing a little bit, right? A lot of traders tend to panic and close their positions. That is a trap trader setup, right? So I have this man is very tested, right? It's tested for, I think this is the third time or fourth time. So I don't expect this to work. But it can certainly work again, because today I'm expecting just a sideways day, right? Since I'm expecting a sideways day, it could work and bounce from here to here and then bounce the rest of the day.
The tick and ADD on the ES and NQ continue to push lower.
Yeah.
The tick is making new extreme lows on both charts. Let me switch over real quick, show you guys what I'm looking at. I have here the NYSE advanced decline line for the ES. I have the advanced decline line for the NQ, so the ADDQ, and then I have the tick Q below it, and the advanced decline, or sorry, the tick for the ES. So both ticks are down here. They're reaching extreme lows now at the moment. NQ just made a new low there. It's starting to push back up, but you'll see the ADD is continuing to drop well into negative territory after starting at around break even, at around the 0 line. To the right of that, I have the volatility index. This is the VIX, which has decided to shoot up these last 15 minutes, hence why the market is dropping. We have the dollar index on a 30-minute chart, and it's been on a steady rise for about the last hour or so after the decline in the European session. I have the daily chart of the dollar as well here, and it's a doji up here to the left. Let me shrink this down. So it's basically flat on the day after this push back up, and it's been in a range for the last 4 or 5 days after a steady show of strength from the dollar over the last, really over the last month or so. And here I have 10-year government bonds, which is at it just shot up to 3%, 3.001%. That's at quite the high. This is a daily chart. And so that's what I'm looking at here. I use the ADD, these two, to help me with my trend, the current trend. So the current trend would be down on both the ES and NQ, and I use the tick as a confirmation. We'd like to see it make new extreme lows, come back to the 0 line before getting into a trade. This would be the pullback. This would be confirming the pullback to get into our trade, but we still want to see the ADD dropping. Back to Franco.
Yeah, it looks like it wants to drop. But look, one thing that I like to demonstrate, right, is how a professional trader behaves. And there's one friend of mine that said, like always says it, like, damn, you moved 200 points. How do you miss that move, right? I have two answers for that. Number one, it does not move 200 points every day. That's my first answer, right? And the second is that you have to have a system. If you have the system to catch those type of moves, great. For me, it's more, I want to see it move out, right? I want to see it come back, right? And you ask me, Franco, you had that zone. It's working right now. Why you did not take it? And I go to my second point. My second point is, you need to have a system. And my system says, all right, guess what? You can take the trade here, right? You can take the trade here, right? But I don't want to overuse this area, right? It lowers my probabilities. Why? Because for this thing to happen again today, there should be the same actors influencing the price. So my analysis here is, all right, I do see here a on the forming of the zone, I do see an institution buying, right? Great. What happened when the price come back to that area? The same institution or the other institution would join and buy again, right? And that happened yesterday, right? So I question myself, what if the orders are gone? What if they already, bought everything they needed, right? You don't know what's their average, if they can afford the drop, or if they want the drop so they can keep buying, right? Or if they will buy it here again. So yes, this could work, but the probability is not on the side of, all right, it's gonna keep working, right? For me, is the second test, meaning is this entry and no more, right? Now, what I could do is take this with another approach, like a bull bear zone. Like I say, all right, if above this area, then bulls are in control. Below this area, then bears are in control, right? So what I could do is this. If I see this, and the if statements, I learned that from Mike Bellafiore book, One Good Trade and the Playbook, right? Professional traders have these if-then statements constantly, right? All right, what happens if this happens, right? All right, if it comes back here, I will try to find a way to short this thing again, right? Why? Because I don't have anything marked off to the left. I see this like a free path to the downside, right? That might not be true. Like, it can't bounce anywhere. And what you need is a big order coming in the middle of nowhere and turn the price to the other side, right? But I have a system. And me having a system, right, makes me consistent with my results. And consistency on my results, I can go ahead and plan, right? I can go ahead and plan my trades for the day. I can go ahead and plan my risk management. I can go ahead and do good things, right? There you go. Look, it went through the zone, right? Like I said, right now, this is turning. If this candle closes below here, right? And why do I need the close below? Because you cannot be precise in these markets. There's a lot of room for institutions. They buy in ranges. It's not like me that buys in 15-point range, right? They can buy in 50-point range, right? So even though this is the area that I have marked off, I want to see the price closing of the zone to give me some signs that, all right, that's not a buying area, right? But what happens if buyers push the price up here? It can bounce from there too, right? So my system says, all right, if I have a close here, I can go ahead and try to plan a short around this shadow area, right? There's 3 more minutes to go here.
Hey, welcome to the channel.
And it might sound a little boring sometimes because waiting is one very important part of trading. So right now, for the account size that I have here in this funded account, I'm allowed to risk $322 with 50 cents, right? So that's why you guys see my zone here. The correct way to trade this is like this. Bless you.
Thank you.
Right? But I like to give some wiggle room, right? Like a couple more points. So if I risk the whole zone, it'll be $440, right? So I have a spreadsheet here on my left that I will show you, not today, but later in this channel, right? I have a money management, risk management for every day and every trade. So the way it works is, okay, I input my trade result from the previous day, right? And that will give me dollar amount, how much I can risk per trade. Based on what? Based on risk that I predetermine to grow my account. And not only to grow my account, but to avoid the risk of ruin. What is the risk of ruin? Well, it's no more like the risk of ruin. The risk of blowing your account, right? How do you blow an account? Well, you keep risking the same amount regardless of the size of the account. If you have an account with $50,000 and then you risk $2,000, right, per trade, that just will take just 25 trades, 25 consecutive losing trades to blow up the account. Whereas if you risk a percentage of the account, let's say 2%, right? That'll mean you will have a lot more trades, right? Because every time your account decreases in balance, your risk per trade has to decrease. And the opposite is true also. Like if you grow the account to $60,000 and then you want to trade 2%, that means that instead of risking $1,000 per trade, then now you're risking $1,200 per trade. And you have no idea how powerful this is. The compounding is very, very powerful. In few weeks, few months, you'll be grown your account to numbers that you don't even expect it. Every time you grow an account, there are certain things that you need to be aware of, like psychologically. If you're starting off risking, like me, $300 because this is a new account that I'm doing this challenge for these lives. $300, then in a matter of few months I will be risking $1,500. Is it the same psychology for you to risk $300 instead of $1,500? Of course not, right? But that's where you need to be wise and try to adapt and prepare yourself of, all right, this is how compounding works. And if you go to the spreadsheet and you do your numbers and you do the work to see how money works, then that's where the trading secret is. It's not being more aggressive, it's not being overly aggressive or just risking your house in one trade and try to make it. I think consistency, number one, on your process, and then risk management. Those are the two main pillars of a professional trader, in my view. I don't know, what do you say?
Agreed.
So for me, the process works like this. Like, let's say you're not a trader, you just, because a friend told you, introduced you, all right, this is trading, right? how do you start? So you start first finding an edge. If you find an edge, then you can move on. But the first step is finding an edge. What? Alright, I created a system, right, that makes money. Is that complicated? It can be, but you can find someone that gives you the edge. The thing is, when traders fucked up is when things turn ugly. Like, if you have a system but you didn't follow the system, that is not the system's fault that you didn't make it, right? And that was my case, and I think the majority of traders cases that do that. So if you have a system that really works, then you have your numbers. You can start off just messing up with the numbers. Like, all right, I have an EMA. I don't use EMA. You see my charts. My charts are clean, 100%. I don't like using indicators, right? So what I do is, all right, I trade it, right? I traded, I log in my trades, I see the conditions of when the trade happened and how it happened, and I say, alright, so when I do this, I tend to win more. And when I do, let's say, if I do A, I tend to win more. When I do B, damn, I tend to lose more, right? So how do you start? Alright, so start avoiding the B's. No more B patterns, right? And see how your trading approach and results change over the next few days. And when I say next few days, I would say like 2 or 3 weeks, right? And then you start to, like, implementing or investigating or trying to test more things. Like, all right, I have this indicator and that indicator, and when I use this indicator, sometimes it works, sometimes it doesn't, right? But I have probably a third indicator, right? Volume. When the volume is higher and these things are aligned, all right, so that's it's giving me more, like, confidence, right? I will have 5 winners and just 1 loser. Now we're talking, right? When you have those kind of numbers, when you have overwhelming probabilities on your side, on each side, or on one setup or another setup, then you start to find edge, right? So you find edge. After you find the edge, you work on your consistency. All right, how do I do to follow this plan and try to avoid more mistakes? Because I make mistakes like every day, but the good thing is that I record these videos. I've been recording for years now. We just started the live on YouTube, but I've been recording my trades for years now. So I go back and I see the recording, and when I log the trades, I can see how the chart, certain things were not aligned, right? And I don't do indicators like RSI, CCI, or whatever, or EMAs. I do, for futures, I do the ADQD and the tick, period, and multiple time frames. I want to see several charts, right? So when I log the trade, I realized, damn, you made this mistake, right? And the next day you try to avoid it. Well, guess what? You did it again. But after you did it the second time, you can be even more aware, like, damn, it cost you $500 yesterday. Now it costs you $500 today. It's costing you money, right? So you try to feel it. You try to sense that that's not the right path. So you next time are more aware. Like, all right, when the ADQD is doing this, I'm not taking this short, or I'm not taking this long, right? So that's how you gain your consistency, and then the risk management will take care of you. Period. I think those are the 3 stepping stones to make it as a professional trader. Alright, we have our order here. I've been talking a lot. We've been already like an hour into this live. And this sometimes be very boring, right? Because sometimes I'll be like, I put the order and then the price comes here. Let's say the price come here. I was just expecting this, and then boom, right? But it never came back in to my zone. So that's the way trading works, folks. We need to be very, very patient. Unless you have a system to trade every drop, which I don't have. And why am I leaning to the short side still? Because I don't see any changes in the ADQD. So I see the majority of the stocks in this index, the NQ and the Nasdaq 100, the majority of the stocks are dropping. There's a universe of around 6,000, 5,000 to 6,000 stocks, companies in this index. Like 1,400 are going down, right? No, sorry, not 1,400. The difference between the ones that are going up and going down, right, is now 1,400 negative. So the majority of the index is selling up. So I can notice that on my watch list. I got I have a 126 stocks, right? And it's mixed. It's not only technology. I have some S&P big companies. I have some Dow companies here. I think all of Dow companies are there. But I can see on the weaker side, like I have Lyft, Toast, Uber, Tiva, Piton, Square, 1, 2, 3, 4, 5, 6, which are on the deeper side. They're all in the NQ. No wonder why NQ is the weakest one right now, right? Because I have the majority of the technology stocks going down even deeper than the other one. Like for instance, I have I don't know. I had Costco here. Yeah, Costco is like minus 1%. It's not. Boeing is minus 0.8%. GM is 0.74%. All negative, right? So yeah, you have to have this, type of analysis. Any comments? Any comments?
Not at the moment, no.
We have some algo trading going on. Can you update us on what they're doing?
They are short. They're short one contract on the ES and one contract on the NQ. Micros, MNQ and MES. And they got in near the top of that move down, so it's doing fairly well right now.
Alright.
It did reach demand though, which concerns me, but with the algos, it kind of is what it is. You got to let them do their thing.
Yeah. All right, guys. I think I will keep that order there. I will record it if by chance it gets filled, so I will post the video, right? But for now, I think I'm gonna leave it like this. Please don't hesitate to comment and follows, hit that thumbs up, and subscribe so the YouTube algo can help us out here. We're just starting this. This is our third day, and we want to grow this channel for this year to see how it goes. So we're just having fun and try to share this information at no cost. We're not selling anything. We're just doing this for fun and
for educational purposes.
For educational purposes, yes.
And for ourselves.
Yeah.
To help improve our trading as well. So.
Yeah. All right. See you guys tomorrow.
Good luck this afternoon.